Hello and welcome to another edition of our ETF Insights series, where we chat with innovative leaders from the ETF and digital assets ecosystem. Today, I'm really delighted to be joined by Andrew Limberis, who is with OMBA Investments and Advisory, which advises high net worth clients and family offices based in London. Andrew, it's great to see you. I know that your firm is known for using a lot of ETFs in your portfolios to keep costs down for clients. Can you just run through how your team goes about selecting ETFs for the client portfolios?
We position ourselves as active managers with a very macro focus, and we use ETFs as a building block to create these portfolios. From a data perspective, data is obviously very key in that there are so many ETFs from which to choose. So we sort of split the decision into a top-level ETF decision, where we look at metrics such as the credibility of the issuer, the amount of assets within the ETF, and obviously the benchmark which each ETF may track. And then we also look at underlying metrics within the ETF. So that would be the country exposure, the sector exposure, the factor exposure, and also on the fixed income side, perhaps more around duration and credit quality. So when it comes to looking through the ETFs, it's important to understand various valuation metrics. So we look closely at price to sales, price to earnings, understand the various debt levels, understand some more technical indicators. And this is by aggregating data from each of the underlying companies within the index. It's certainly important to do this in more diversified ETFs, where it's not one or two stocks making up 20, 30% of the portfolio. Another aspect that we spend a lot of time on is index construction. But especially in the thematic sphere, it's certainly important to understand the actual index construction, what is driving the index construction, and perhaps in a year from now, will the portfolio look totally different to what it looks like at the moment? And will that even matter in terms of our investment objective? The other key aspect to ETFs is they're exchange traded. So they're listed on exchange, and therefore execution is key. So assessing the liquidity of ETFs, especially in Europe, where liquidity may not be as high as in the US.
And I think that looking at the underlying liquidities is obviously important in the index methodology. And certainly I can imagine, just considering how many ETFs there are here in Europe, it's a very intensive process to go through and review, based on the clients that you have. So what just kind of tied into that, is this discussion around the need for more ETF education in the marketplace. And I know your firm's client base is high net worth individuals and family offices. Do you find that when you're speaking, like onboarding a new client, do you find that there is a big learning curve for them in terms of ETFs? And if there is, which is totally fine because they're coming to you obviously for advice. But if there is, how do you go about educating them so they understand the benefits of the ETF wrapper?
Most of the clients do know what an ETF is, in that it is this wrapper structure which enables one to have exposures to various different underlying securities. So they understand the initial level, and most of them also understand and appreciate that active managers often struggle to beat passive benchmarks. So that certainly helps in the initial introduction as to why ETFs are beneficial to clients. And there's obviously very many reasons for this: transparency, diversification. But ultimately, from our perspective, we are discretionary managers. So the final decision does sit with us as to what is most appropriate. So it's really making the client comfortable and understanding the risks and rewards of using ETFs. And then within that, which ETFs may be most beneficial.
So my final question, Andrew, is, there's, as you know, Blackwater, we write a weekly newsletter, and there's definitely seems like every week there are a handful of new thematic ETFs coming out, which is great to see. But sometimes these thematic ETF launches are sometimes very niche. And I was just wondering, when you're looking at those, is there an area that you tend to be drawn towards, or is there a particular area right now that you're just like, I'm not really ready to take a look at that yet? You're going to kind of wait it out and see how it performs, like more of a niche area. What is your opinion on that?
I mean, thematic ETFs are certainly very exciting. And initially last year, we had a number of questions from clients showing some interest in clean energy and cloud computing, just showing some initial interest. And from that initial interest, we spoke to a few more clients, and there was actually real demand for thematic ETFs from what we saw. And off the back of that, we've actually launched our own thematic fund, which buys other thematic ETFs. So there has been real demand behind the initial interest of cool and sexy themes. Everyone knows clean energy and cloud computing. There's always some sort of attraction and some sort of story that is very easy to communicate to investors. That story is obviously not always grounded in strong research. And from our perspective, there are a lot of thematic ETFs out there which either don't have the robustness that other themes may have, or in our perspective, the timing in terms of the adoption curve may be wrong, or simply the valuations may not align to our outlook for growth. But when it comes to thematic ETFs, we do need to be aware of the macroeconomic environment that we're in. We obviously had very strong performance from them post the COVID lows, but the macroeconomic environment has changed a lot. Interest rates are rising, quantitative tightening is starting to occur, and this is certainly having a knock-on effect, especially in the growth sector, of which many thematic funds are. Not all of them, but many of them are more focused on growth and smaller cap names. So in terms of selecting our themes, we obviously think about how strong these mega trends are in terms of the adoption curve. Is there a lot of penetration? Smartphones, for example, have been around for a long time. We look at a lot of different factors in terms of the adoption and in terms of changing demographics, for example. But really, you need to understand the exposure, especially in terms of index construction for thematics. In terms of one of the areas we do think is very interesting at the moment is certainly decarbonisation and clean energy. It's very relatable to investors, whether they're retail, mass affluent, or high net worth or institutional. It's very relatable to many clients. And we also think in terms of ETFs that are available, there are many to choose from in the clean energy and decarbonisation space. And another thing is certainly linked to the macroeconomic environment is policy support. We've obviously seen in the US, there's been strong policy support for clean energy. Likewise in Europe, and certainly looking forward, that's certainly going to be a very strong tailwind to the theme. So policy support, macroeconomic variables, and various other sort of more broad megatrend factors are certainly important in us deciding which of the themes we want to own now and which of the themes we want to wait before we look to own.
Yeah, and that makes sense. And definitely, there's no question that investors have definitely adopted that, clean energy, themes, which is great to see. And hopefully that kind of jumps over and becomes a much bigger thing in the US as well, because obviously there's some other extending, benefits to that outside of ETFs. But Andrew, this is really great. Thank you so much for your insights. And for those of you who are watching, if you'd like to watch this video again or any other video interviews like this, you can go to our website, which is blackwatersearch.com. Thank you.